Okay.
Awesome.
Um, I did a little presentation. Can you see it, guys?
Yeah, we can see it.
All right, so Dwayne
Yep.
introduced himself. Saber's not able to join us today. Um, but here are some questions that I think a lot of small businesses may have for a banker. So Dwayne, when you're meeting with a prospective small business or when a small business comes to you, what should they be looking for when choosing a bank?
I would say they should be looking at a relationship, because a bank is a bank is a bank, but it's the relationship that goes longer and deeper. I guess when I think back about some of my strongest relationships, it wasn't that I got $5 million in loans or deposits from them. It was more um, beneficial to me that after we've been in a relationship for 2 or 3 years and their kid is graduating from college and he's starting his own business or he's going into a dental practice, they want to refer me to their family members because I've done a good job for them. And then the relationship continues. So I'm not just I hate to say it, but a lot of bankers in my situation or in my position are what they call one-hit wonders. I'm there for the long term. I have partners, yes. They assist me in doing things that my capacity sometimes doesn't allow me to jump out and do, but we all stay in tight communication.
So who facilitates this relationship? Does my banker facilitate it? Do I facilitate it? How does it get
Well,
started?
well, I would say I would, in this case, facilitate it with the banker. I would do an introduction to you with my partners that I work with, so that we can better serve your needs for your business. I mean, that's the goal. It's not about the bank, it's about you. So we try to find a convenient time that works for you for us to sit down and talk, even if it's a conversation over the phone. Right now during this time, we understand that a lot of clients want to meet virtually. So we'll set up virtual calls just as this, just to handle that. And we can do it all online. I actually just put together an application with the client online, me and one of my business partners, and we have literally got a complete package to submit this afternoon, but it's all been online.
Okay, so now with that, so I've started my business bank account. I'm a new business. I've started my business
Uh-huh.
banking account. What do I do next? How do I start this relationship with my banker? I've got my bank account. You've given me all my papers. I've got my folder. What happens next?
Well, I would probably, if you don't have an immediate need, I would stay in touch with you at least quarterly. Um, and we could discuss how you would like for me to stay in touch, email, phone call, just catching up. Or I like to facilitate not only stuff for my business, but I like to do introductions to other clients that could possibly use your services. So if I know, let's say I got a guy who owns a plumbing company. Well, I run into people all the time that say, hey, business or personal, hey, I need a hot water tank installed, or, my water line in my business just broke. That's an opportunity for me to do an introduction to you, to a client, to help further our relationship. Because as you're going out there, you might notice, man, I need a new truck. Well, that's where I might be able to help you in financing a truck, because we've got great opportunities in our equipment finance right now where I could literally do 125% financing over 60 months just based upon 2 years in business and a credit score.
Okay, so does every bank have someone like you? What if there isn't what if you go to the bank and again, you just deposited your money and you go in and you make deposits and you make withdrawals and nobody's ever done those things that you're talking about? How do you encourage your banker to do that or facilitate that? Or should you just go to another bank or just find you?
Well, sometimes you have to have enough knowledge to get past what we can all consider the gatekeepers. The gatekeepers of banking are the branches, you know, the tellers on the front line. And it should be obvious, but sometimes it isn't, that there, you as a business owner is looking for more than what the branch can propose as far as a relationship. So sometimes there is opportunities for us as uh, what we consider ourselves business development consultants for the bank to educate internally as well as externally. So if you're going into a branch and all you ever talk about is just making a deposit, nobody knows that you may need a building loan. You know, so it's an obligation, I think, on both sides, because the bank wants to help you, of course. And you know, we don't want to be that bank that's calling you every 5 minutes, but we want to be there when you need us because we don't want you to go anywhere else. But at the same time, we respect your time and operating your business. So you have to notify us as your needs grow or as you need anything sometimes, because you know we don't know how to reach out to meet you halfway if we don't have a means of connecting. You know what I mean? If you don't get to the right person, if you're just only coming in doing deposits, you know, sometimes you may have, and this is probably any bank. I mean, I've worked at three, so I would say we don't know that you need a building loan until you tell us. But after you tell us, it shouldn't be no more than 24 hours that you get a call.
So as a business owner, should I be looking for the bank's business specialist like what you are versus just going into the bank and handling my normal business? If I want other needs or to establish a relationship, I need to seek the business consultant or business specialist from the bank. Is that what you're
Yeah,
saying?
yes. So as you walk into any bank, I think it's fair to say when you go in the door, you need a business banker. In my case, I used to be a business banker, as you know, for many years. Now I'm more of a consultant where I help the business bankers to navigate through the opportunity. We're teammates. The bank has went to another level of partnering, basically, just so we can formulate and engage better with clients as they come through the door. So all banks are going to this new level of business banking development consultant. And in that consultant role, I consult with the banker and the client, sometimes all three together on a call, but I help guide the process in order to approval, collecting documents, whatever we need to get over the finish line.
That's some good information. I see a couple people have joined. Do you guys have any questions? You can unmute yourself. And if you have any questions, please feel free to ask them. So Dwayne, what are some of the ways, what are some of the competitive products people should be looking for from their bank?
Right now, I would say the most competitive product that businesses aren't aware of is their credit card processing needs. Um, Credit card processing is critical because it's working capital for the business on a daily basis. Because it's actually your money hitting the bank at that time, that day, and then the costs are important. You know, you would think, you know, $2 or $3 per transaction doesn't add up to a lot, but when you're only getting maybe $500 and they're charging you on every transaction, I'm sorry, not 2 to 3, but they're charging you on every transaction 4 to 5. Well, that changes things. You figure if you've got a product that you're selling out of every day, and that product costs you to sell it, or the consumer's buying it at $10 or $15, well, you're losing on your product sales immediately $4 to $5 just based on your processing charges. So it's important that you have that, and it's important that you have the right checking account. You know, there are free business checking accounts, which we have, but then there's also things you have to realize, such as Um, not just the free business checking accounts, but the ones that match up with your needs as a business owner. So when I say that, a lot of checking accounts will give you 50 checks, um, 50 free deposits, 50 free uh, um, cash, what they call cash withdrawals. Well, if you know your business is doing 200 deposits, you might have to pay for it, and you might be able to negotiate the price at this time, as opposed to getting a free service that doesn't work for you down the road, and it costs you more to change, switch, especially if you're getting credit card processing, because the average retailer, as an example, uh, I know it's impossible for me to keep cash right now because I have a 15-year-old daughter. So the average person at one point, they said, kept at least $35 on their person. I don't think that's the same anymore. I think more and more, just because the safety of using a debit card or a credit card is more crucial. So we don't carry cash. So as a business, you're more susceptible to get credit card processing as opposed to cash. And then with the, I hate to use the scare of COVID as a tactic, but I have a client, she refuses to take cash anymore just because of COVID. I don't know if she understands COVID truly, but that is something that can hinder most businesses. So you have to have those products available for the business community to use for their consumer.
What are some of the other products that businesses offer, that the banks offer businesses, aside from credit
So
card processing?
So right now, real estate financing is really good. We're doing really good on refis. We're getting a lot of those through the doors. Rates are really low, so we're able to save the client money. And again, this is a two-parter. A couple of weeks ago, I was able to save client money on refinancing his building. And it wasn't because he didn't have the money to pay his mortgage where he was. It was simply because he was looking for more working capital, as well as just ways to increase his business and then have a little bit more of a safety net of cash flow, increasing that cash flow. So in refinancing his building, his current rate was like at 5.5. I was able to take him to 3.25. So that savings alone. And then again, it's going back to products and services that the bank offers. Well, we have a treasury management product for those that are moving a lot of cash, have a lot of cash coming in, checks and things like that. So a lot of times small businesses are receiving checks on a daily basis, and they wait till they all get to one lump sum, and then they want to go into the bank and deposit them either through the night drop or whatever means it may be. Well, there's products where you can actually scan that check and it's available in your account that next day. So as a product for small businesses, even the credit cards, learning how the bank sees credit card usage going forward as a working capital tool, and as a way of some businesses starting to get on their feet, because banks are adapting just as a small business are. Because we're seeing the same changes that you guys are seeing as small business owners in the community. So understanding credit, understanding relationships, understanding the dynamics of what's happening in the economy, we're always jumping back and forth to try to meet the needs of our clients.
George has a question. What benefits can small businesses operating less than 2 years take advantage of now?
I would say there's a lot. I mean, just depending upon what the needs are. Right off the top of my head, I'm a banker who I just totally believe in relationships. So if I know of a product that might be at a community development center or even at the city or the state that will benefit that client, even though it's not something I gain revenue off of, I will refer you because their product may be better than mine at this stage in your business. But I also will stay in touch with you because when you get to that point of where you want to come with me, I want to be ready. And I want to have a trusted enough relationship with you so that you feel comfortable calling me on a Saturday afternoon. Of course, after a Ohio State game go off, but I want to be that comfortable to where you're like, all right, let me call Dwayne and ask him this quick question. That's how most of my clients are. I mean, it's not a problem. I mean, if I'm, if I'm at church or at home on a Saturday afternoon, I'll call you as soon as I get free. I don't mind that. Even if it's just, I had a lady call me beginning of the fiscal school year for colleges. She was still looking for her daughter a student loan. Well, as you all probably know, student loans are mostly all ran by the government now. So, and having that conversation with her and informing her of the changes, she said, well, maybe that's not the best way for me. I need to find another way. Well, we determined that she gets a free and clear house and she gets a bonus of about $15,000 to $20,000 every year. So we decided to just go ahead and do a home equity with her. And then she just pays it off every year and she gets her bonus. So it's all about the opportunities and understanding the customer.
Someone else, Miss Berry has a question. How soon after establishing your business can you get loans?
Well, it just depends. I mean, if you start your business April 1st and then April 15th, you got $1 million contract, that's exciting to the bank. That's exciting to any lender. But it comes down to, it's simply, can you afford to pay back the loan? The bank is literally looking for repayment, collateral, and building that trusted relationship. And when they can't build that and you come in and you want a loan, that's where it makes it hard. It's almost like you got to go through that dating period. Before you trust that person to drive your car, you get to know them, right? Same thing with the bank. The bank wants to get to know you. So it takes some time. It takes trust. I mean, I had a business client a couple of years ago. He said, well, you guys don't want a relationship. Well, it wasn't that we didn't want a relationship, but the majority of checks that you were depositing were bouncing. So, as far as establishing a relationship, if you're giving me all bad checks, you deposit 20 checks a month and 15 of those are not good, that's a hard relationship and you just establish it, right? So banks are looking for that relationship that they can depend on just as well as you are. And if being transparent and you saying, okay, I know a lot of my checks may bounce, talk to the bank because that way they know that there's an open communication line, but then there's also products that they can help save you money on. Instead of you paying a bounce check fee, they may put you in something where that check may just be deposited and held until it's cleared.
Okay. George, you can ask your question. Okay, George had a question. Do banks or specifically US Bank help with account receivable loans?
Oh, yes, we do. Yes, we do.
Okay, what's an account receivable loan?
So account receivable loans are where it's a working capital loan, basically. So you provide a service and they may pay you over 60 to 90 days. I'd probably say most businesses are about 120. And a lot of times the bank will come in and be an intermediary funding source to that business until they collect it. So if they've set up terms to say 20 net, so a lot of times they'll collect 20% up front, and then the other 80% they'll collect in 30 days or 60 days. The bank will provide a line of credit for that business client so that they can keep operating until they collect that money. And then the bank has other resources as well. So if you don't fit into the quote unquote banking system, we have other partners inside where we might be able to get you maybe a factoring loan or something of that nature to help you fund your business.
George,
Yep. Can you hear me?
if I can hear you. Do you have
Okay,
another
sweet.
question?
Yeah, and it was almost like a follow up on that question. Hey, Dwayne, appreciate you coming here and explaining a lot of things to us. Um, so
Not a problem.
following up on that question on account receivables, for the most part, when we do, for some, federal contractors like myself, we most often work with net 30s and net 10s, maybe sooner than that. Um, but when it comes to obviously working with on the federal level, we sometimes have to fund these deals, quote unquote, fund these deals upfront, because we may have to have things moving first before we can actually have the products or services delivered to the client. So, apart from accounts receivable, do you guys help with, potentially being a federal contractor, but once you're assigned or once you're awarded the contract, is that good enough to even seek some funding once we do get that award certificate to present to the bank?
Yes. So we have partners. Again, I mean, I'm a big relationship component. So I use my entire network. So I have internally, I have SBA, I have what we call we partner with an outside group called LSQ, and then I know other lenders who can help meet your demand or your need at that time. But even in going, let's say you're starting out your business and you've got a contract, everything is based upon the contract that you hold. So, Mike and Joe, who is a local business owner who owe you money, that might be a harder receivable. But then you got Dollar General that you've got a contract with, and they owe you money. Well, of course, that's going to be a stronger receivable. So that's going to be a receivable, but the contract's not going to be taken. But the fact that you've got an accounts receivable, that's going to be taken and used as collateral. So you've got two types of financing that you're mentioning: contract and then accounts receivable. And they seem like the same, but they're actually quite different.
George, do you have another question? George, you're on.
Hi. Yeah, sorry about that. I think once I go on mute, it mutes it forever again. Um, Sweet. So yeah, that makes sense. So I guess from your point is Mike and Joe versus that's a good example of comparison. Mike and Joe versus Dollar General, or even on the federal level. That means that those are pretty stronger accounts receivable. Are they normally funded 100%, or is there a percentage of that?
They typically do 80% or 70. It just depends on who that funding is coming from. And then it also depends on what source we use. So, like I said, I try to be, if I can't do the deal, I'm going to refer you somewhere to help you get it done. I'm not going to have you going all around the world. I'm only going to have you go to maybe one or two people at the most, because time kills deals and it wastes your time. So I will probably refer you to one or two people. One is a contract financer, and the one finances both contractor and hard money. And in both of those cases, though, I would not want you to stay there long term, because they're more of the riskier, higher type of financing. So I'm only possibly looking at maybe 6 to 12 months. That's it.
Right.
And then I'm going to try to bring you back into the bank where I can show you benefit from doing that and savings that I can bring to you. But the key part is, sometimes, like I had a lady that did prison guards years ago. Well, Unfortunately, she had some things that happened in her life. So she went through a really bad divorce, and she had some medical bills and stuff like that. So her credit was challenging, to say the least. But she had a contract with someone where she was. I mean, at that point, I think she was doing close to about $800,000 a month in security, or a year in security guards. So I was able to help her get financing. I took her from her previous bank where they were literally just charging her like the wazoo for every little single thing. So I gave her a free business account, and then I just helped her manage her accounts receivables and her funding with the funding company that I work with, to where we can make her a customer of the bank completely.
Gotcha.
So I was able up front to eliminate on the banking side, I want to say like $700 a month in fees that they were charging her, because although she was using another funding source, they were charging her for that deposit. So on every deposit, let's say over every deposit past 5, they were charging her $20.
Wow.
So it's important that you have that relationship. I mean, relationship goes beyond the initial meeting, to say the least. Goes way beyond the initial meeting.
And then, in terms of relationship, when you say that, are you normally talking about speaking with your banker, or are you talking about building a relationship with everyone in the bank once you go, if you do visit the banks regularly?
Well, I mean, it's all right to wave at the teller behind the line and come over to the other side. But most times when you have a relationship with someone like me or a business banker, we're not in the bank. You'll find us prior to COVID. You probably find most of us at Starbucks, Panera, we're at Rhonda's MBE event, somewhere like that. Because, for us, we do our best job when we're out in the street meeting people. That's probably 80% of what we do is meet people, build the relationship. And that's key. It's all right to have the relationship with the branches and with the individuals inside the bank. I'm not saying anything is wrong with that, but if they're not helping you to grow your business, like someone in my position or a business banker can, all you're doing is doing deposits, because that's the limitations of the bank.
Right. That makes 100% sense, because I was doing that and I was thinking that building a relationship is by doing deposits and showing your face regularly. So it makes sense.
You are building it with the people in the branch, but you got to think of, can they get you a loan? They might be able to do 15, 25,000, but a lot of your banks are putting that situation in the hands of people who have more knowledge.
Mm-hmm.
And it's nothing wrong with that, because the more knowledge you get on something like that, the further you get along in your business. I'm not gonna call you and have you come meet with me and do that, because you make more money staying at your business working. I'm available after 5 o'clock.
Mm.
I'm available before 9 o'clock. People in the branch work usually from what, 8 to 5?
Yeah.
If that now, I think most branches close at 4.
Yeah.
And if we go back on the lockdown, you're going to be in the drive-through. Well, how long can you spend in the drive-through talking to somebody about your situation?
Right.
As a business banking development consultant, just call my cell phone. If I'm not available, I would say 100% of the time, I may shoot you a quick text back and say, hey, I'm at my daughter's soccer game or volleyball game, or, my nephew feels like he's got 2 dads right now, right? So I'm at his football games, it's something like that. but it's the fact that you want to return call. Otherwise, you wouldn't have called me. You got a question now. So
Right.
the quicker I get back to you, the better it is for you, because you're the one restless overnight trying to figure out, okay, what's he going to say on Monday and it's Friday night?
Mm. That's pretty
You know,
Question. What are the differences between a community bank and just I guess, a regular bank?
well, I guess the biggest differences is most community banks have decision-making power right there within the community. Um, a lot of community banks don't do certain types of lending. The lending, I'll say a lot of community banks and a lot of metro banks, they all do something different. So even, I guess I'll use this as an example. So your community banks, because they're in the community more, you'll see more land development. Sometimes you'll see more riskier type loans because they may have a personal relationship with that developer. Okay. Whereas if you get with a metro bank or farm loans, that's what I'm looking for. Farm loans. They'll do more types of deals that community banks or metro banks won't do. Metro banks will do those same loans, but they may do them at a higher loan to value. They may say, well, the lowest I can go is 60 or 70% loan to value on that property. Where a community bank may come in and say, well, I could do 80% loan to value, because they're making a decision based upon being in that community. Whereas a metro bank, we're sending usually our decisions to a credit center. So we're trying to keep an even playing field as to what we offer. Where community banks, they may offer certain things to certain clients. I remember there was a guy here, and you probably, I don't know his name, but you probably know the situation. This guy had, I'd say probably 400 investment properties. Well, of course, no metro bank was willing to do business with him, because that's a hard number to have, and you not meet liquidity requirements and things like that. That just means you can just go into a bank and they're just giving it to you based upon your name. Well, that same individual, as far as I know, lost all 400 of his properties. In most cases, that will put a bank under and stop them from lending. You want to know why your banks don't lend to certain industries anymore, or they're more cautious? It's because they've taken a loss in that industry. I mean, nobody wants to take a loss, right?
Mm-hmm.
Banks don't either. They want to help you to succeed, but they don't want to set you up for failure. And sometimes when you got individuals who own a lot of, that take on a lot of risk, but don't have the equivalent of liquidity or cash flow that we can see, touch, and feel. And what I mean by that is they don't bank with us. You're not gonna have a lot of success getting that bank to back you, just because you're banking with the community bank, but you want to go to a metro bank to get a loan. That's hard for any metro bank to do, whether it be U.S. Bank, Chase, Huntington, Fifth Third. I think I can speak for all of them and say, you can't put your money in Southwest Community Bank and then want to come to U.S. Bank and get a loan. We're going to want the whole relationship so that we feel comfortable. And when we stop feeling like when we start feeling like, the default ratio could be a little higher because you're now over leveraged and your liquidity doesn't cover the ratios that we want, that's when we're going to pull back. And that's where your community bank may do it just because they knew your father and your brother and your mother when they were children. You know what I mean?
Right.
And that's good and bad, because it's a plan for disaster as well. It really is, because they could keep giving you money and literally push you down a hole. I've seen that happen.
Dwayne, you provided some really valuable information. We're very thankful. In closing, can you give us just a few tips on what businesses should do to establish this good relationship with their banks and their banker?
Take them to lunch. Always find out their birthday. I would say it's not your job to establish that. It's the banker's job to establish that relationship. And how do we do it? I mean, it may not always be something material, but everybody likes to feel valued, right? Everybody wants to know if I call you, you're gonna call me back within an hour, 2 hours during the day. I mean, unless there are things that come up, but I shouldn't call you on Monday and you're returning my call on Thursday evening. That's not a relationship. I look at the customer relationship with me as kind of like my first manager. And I really didn't like him, y'all. I got to be honest. I didn't like him at all, but I understand him more now, being in the position I'm in now in the bank. When you're involved with a customer, your first 6 months is almost like I'm gonna use my grandmother's word. You're courting, you're dating. Okay, you're courting them. You want to see what makes them happy. You want to see if you guys can meet to make this relationship work, to make it equivalent for both of you, but also just learning about each other, right? And then, like I'd say, the next 6 to 18 months, you're past that now. You're on a trial basis. You might take them around your family. Well, in this case, you might introduce them to the bank on other products. You may not have nothing business-wise, but let's say you got something they want to look at, trying to refinance their home mortgage. But that's not what you do, but that's your customer. So you introduce that relationship to them. It's just a holistic approach to banking that is probably in demand so much now because of what's happening in the economy, but even more importantly, what's happening in every industry. There's lack of trust here, lack of trust here, lack of trust here. People don't want to work with people here, there, but it's all about, okay, in order for me to be successful, I have to have these relationships, because you never know when Rhonda may get a call and someone say, well, Rhonda, I got to switch credit card providers right now because the one I got, they take 24 hours to deposit my money in my account. Well, Rhonda can say, well, I know Dwayne, and he's at US Bank. They do same day deposit. So if somebody swipes at your business at 2 o'clock, you can set up a time at 6 o'clock in the evening, that money's in your account. That's where it boils down to. I mean, because that money ultimately turns into working capital for the next day for the business owner. So I would say that there are 3 things key you need to have in your business: a good accountant, a good business banker, and also an attorney. Because all 3 of them should know at all times what direction your business is going in. And if they don't know, you need to go back to your business plan and check it out. And then after they're on the same page, keep formulating that relationship with your banker, because your banker can help you grow, or he can literally keep you stagnant. If you're paying, case in point, I had a client years ago that literally was paying $4,500 a month in rent, plus all utilities, taxes, everything. But he had no ownership in the building, none. He was just a tenant. So I literally showed him the numbers, and I said, we need to go find you another building, because at the amount you're paying, You should own this by now. You've been here 7 years paying him this amount of money. You've already bought it. You know, it's like renting a house at $2,500 a month, and the house is only worth, you know, 150, but you've been there 10 years. You've already bought it. So I try to bring those, I don't want to say simple solutions. I just try to open up the customer's mind, the business owner's mind, you know, because their job is to think about the business. My job is to think about opportunities and how they grow. That's my job. How I can save them money on a daily basis. You know, how I can get them money faster, quicker, so they can use cheaper.
Wow, this has been a really good hour of time spent learning some really good information about the banking industry. Dwayne, we're very thankful. We're definitely going to do this again. If the participants don't mind, I'm going to shoot over your email addresses to Dwayne so he can follow up with you guys, and I'll give you his information as well. And if anyone doesn't have any other questions, we're going to close this session down. So if there are any questions, here's your chance to ask.
I have one more question,
All right,
Dwayne.
George.
I appreciate, I would love to take advantage of this opportunity because I know, well, time is always the of essence, and so I use as much as I can. But Dwayne, I'd love to obviously also meet up with you sometime if you're local here in Columbus or wherever. Sometime. We'd love to sit
I
down
am.
and chat. Awesome. Yeah, sweet. Let's we can do that as well once we finish this conversation. My last question is from a bank's perspective, right? We as business owners, sometimes we do get the gist that the banks don't want to help, right? And then we tend to switch banks, or we tend to move from one bank to the other, or hopefully we just have multiple banks account open at this point. Whoever gives us the best products, whoever gives the best products is the winner. But I believe that every bank probably operates the same, if not more. And when it comes to um, growing as a business, having the right bankers number one, of course, but also having the best support system, which is the bank, to help you grow. My only thing with this is my ideology of a bank, and I may be wrong, but hopefully you can correct me today. But my ideology of a big bank versus a credit union is a big bank only wants to work with the clients who bring in the cash flow. Um, Versus the credit union, they have more flexibility about what you can bring to the table, or even has a whole holistic approach the industry that you are in. And so my question to you is, maybe correct me on that note. Let me know if I'm wrong or not. But also my other question is, from that standpoint, how is cash flow kin or is credit kin?
Okay, so I'll tackle first the bank and what's really important to them, small bank versus little bank. Um, I would say small bank or credit union versus like a regional bank or even a local bank. I'd say it's pretty much the same. What makes you different is just some of the policies and the regulations that are set up not by the bank, but by I'll use the Ohio Office of Comp Controller or by the government. So they're governed by separate entities to how they lend. So when the bank is violating one of those entities on how to lend money, they sometimes get fined, because across the board, every bank has to be equal in how they lend. That's the Fair Lending Act. So, and I'm thinking of a situation I know of where a community bank was lending money for a house, and then a metro bank lended money for a house, and the metro bank basically came in lending at a higher percentage, but their rate was lower, as opposed to the community bank had a higher rate, and their loan to value was higher. So it just depends on, you know, where the bank is at, soundly, and I say soundly meaning financially, in regards to their regulations, in regards to their policies. In regards to your second question, about, you know, it was like about banking. I'm sorry, I was so focused on that, I didn't get to write down
yeah.
the second.
No, it was about cash flow versus credit.
Cash flow versus credit. And it's interesting you bring that up. So when you first mentioned that, I thought both of them actually are king right now, because we're in such a weird place in the economy. Everybody wants to see cash flow, but then they want to see what is known as their secondary source of repayment, which is collateral. And then you got to think about the type of lenders that you're running into also. So everybody's going to use cash flow as their primary source of repayment. Your secondary, or what they call your tertiary source of repayment, is going to be collateral. Oftentimes, collateral is the third source of repayment, unless you're working with an asset-based lender. And in an asset-based lender scenario, let's go back to the first scenario where I said you may have a loan to value that's lower because they don't want to extend as much money to you if they're only looking at the collateral repay. So then the collateral may be harder to collect, so they're lending you less money.
Right.
So that's where that comes into play on cash flow versus collateral. But I would say you want to be in a situation because, you know, you have to know your business. And that's just, I don't care who you go to. You have to know your business. So when people come to you and offer you situations, you have to take the best opportunity that fits your business. They're going to offer you the best situation that protects them. And I think you have to be in a situation where you can say, well, I'm a pass right now sometimes, because every loan is not a good loan. And that loan could put you in such a difficult situation that you can't see tomorrow because you're so focused on today. Or it may strap you so bad because they say, okay, well, we'll give you $100,000, but as you collect the money, we're going to put a 5-day hold on it. Well, in that third day, you got contracts that you need to pay, but can't pay. So now they're charging you more money because you can't have access to that money because of that bank regulation. Those are things you have to know, or have a good relationship with your banker, and have somebody that's just not, as my old boss used to say, good dressing, good eye dressing on the window. You have to know somebody that's knowledgeable in the product, as opposed to someone who's just there to sell a product, you know, just there to take orders. You know, you got to have somebody that knows what you're doing, you know, understands what banking is. So I would just say, you know, it all goes back to your relationship, building a good relationship with your banker.
Right. I appreciate that question. I mean, the answers. And,
Well, are there any other questions? Well, if it's officially 12 o'clock, so with that, we will close. I will send everyone information. I took some notes, and so I'm going to get Dwayne to do a couple other sessions. So with that, I will end this meeting, and I will talk with you all soon.
Awesome.
Thank you. Have a good one.
How do we get hold of Dwayne?
I'm going to send you his information in an email.
Awesome. All right. Thanks a lot, guys.
Uh-huh.
All right. Have a good day.
Bye.